Hello, everyone, and welcome back to another episode. I'm your host, Jordan, the Millennial Investor, and today we're going over a stock that is having a horrible performance on the day. We're looking at Beyond Meat stock. They're down roughly 20% from the time I'm filming this video, down $28 a share. And just the other day, if we go back to the month chart, this stock was about 200 bucks a share and it's came all the way down to the low hundreds. So I want to talk about what's going on with the stock, and we're going to go over pretty much all the things you need to know about the company, all the basics, comparing it to a bunch of its other competitors, similar stocks compared to this. For example, like we're going to look at Tyson, we're going to look at things like Hormel Foods, we're going to be comparing it to these other food stocks, and then as well as that, we're also going to be on the investor relations page looking at what they offer, as well as their mission, and then their investor relations page, specifically looking at the annual report. We'll be looking at some of the numbers behind this company, such as the statement of operations data and the balance sheet information. And then we also want to talk about some partnerships, because the amount of partnerships that this company has is incredible, including the recently announced McDonald's McPlant announcement that they had, getting their partnership supplying their burgers to McDonald's for their new McPlant. So we also have other things as well, talking about how their earnings report missed badly, and that is the horrible performance today. That's why the stock is down roughly 20% on the day. They missed earnings, but in my opinion, I think this is a buying opportunity, and I'll give you my reasons why. We'll also be looking at some other deals that they recently got. One that is specifically important to me, I think that this Walmart deal is really key here. They just tripled their demand for their Walmart stores. So I'll go over that in this video. And also, the funny thing is, I didn't even plan this. Last night I was getting ready to prepare this video, and then I woke up and found that they launched another deal with Pizza Hut before I even planned this video. So more deals coming up every single day with this company. It's seemingly endless, the amount of partnerships that they have. And I just want to mention some of their top partnerships right here. I found this article that said their top 16 partnerships, and some of them that are huge in here, not even mentioned. And these names that I'm about to mention are not just your average Joe Schmo burger shops. These are some of the top distributors in the entire world. So just to name off some of the partnerships that they have KFC, they have Subway, which Subway, by the way, has more locations than any other restaurant on earth. More than McDonald's, more than Taco Bell, more than anyone. Third, they have Dunkin' Donuts. They have Blue Apron. They have Famous Dave's. They have Tim Hortons. They have Del Taco. They have A&W. They have TGI Fridays. They have Bear Burger. They have Burger Fi. They have Carl's Jr. They have so many partnerships that are huge name brands out there. And like I said, so many on this list were not even mentioned. For example, like the McDonald's and the Walmart deal, like we mentioned, as well as other things, including Starbucks and some other brands like that. But let's go ahead and get into this video. But before we do so, if you're not familiar with me, my name is Jordan. I'm a millennial investor. And if you watch me in the past, yes, these charts are changed a little bit. I made them bigger and I adjusted for 2021 numbers as well, because we're about to start hitting 2021 numbers. And I track all my annual dividend income and monthly income and portfolio and YouTube income all through these charts right here. And if you want to follow along with me and you're enjoying the channel, what I'd invite you to do is what we've had 55 people do so far. If you sign up with this link and you use M1 Finance, you want to use the brokerage that I'm using in this video, if you sign up and deposit $100 to the platform, you get $10 just for signing up. Absolutely free, no fees whatsoever. It is a free platform to use. And by the way, speaking of which, before we jump into Beyond Meat, has the market not been roaring higher lately? Just in the past month, we're up about 3%, and even on the day, we're up about another percent or so on the day. And just overall, with the compounding dividends and the market continually going up, this portfolio has really started to take off. I know we have not quite hit a year yet. We started this portfolio in the beginning of April, but it's crazy to see how far we've come. I just kind of woke up this morning, looked myself in the mirror, and I was like, wow. We have almost $8,000 in the portfolio now, and we started with $1,500 back in April. So maybe by April 2021, maybe I'll be around 10, 12,000. Who knows? But overall, guys, thank you so much. And if you want to see this portfolio firsthand, or if you want to invest in yourself, this link will also be in the description as well. So thank you guys so much. Let's get into the video and let's go ahead and get started with Beyond Meat. So Beyond Meat, I want to go ahead and show the week chart here, because they announced their recent partnership with McDonald's. And at first, McDonald's announced the McPlant and said that they would be having a supplier for its burgers. Now, this made this stock tank because they thought that Beyond Meat would not be supplying these patties, and then it bounced right back up, and then it trickled back down with the market going down, and then now today they came out with their earnings report and then took it down 20%. Now, the McDonald's McPlant is going to be huge, because other than Subway, like I mentioned, McDonald's has more locations than any other restaurant on earth. And specifically for burgers, they sell more burgers than anyone else out there. And they've been looking for alternatives on their menu for people who want more healthier, life-conscious choices. Now, Beyond Meat as a company, I just want to show you some of the products that they have out there. So let's go ahead and just go down the list and order by the website. They have their Beyond Meatballs. You can put this in things like spaghettis and pastas and things like that. And then they have their Beyond Breakfast Sausage. They have expanded into breakfast foods. They have been offering this to some other big brands as well out there. So they have things like their classic spicy breakfast sausage. And then we go down, they have the one that's the most iconic, the biggest one behind the brand, which is what they're looking to do with McDonald's. They're looking at supplying the Beyond Burger, but they might be looking at supplying some of the things like the supplies or some of the ingredients for the patties through Beyond Meat, so we'll find out more information about that later. But if we keep on going down, they have the Cookout Classic, they have Beyond Beef through other things as well, just basic, just ground beef, not burger patties. Then they have the Beyond Sausage, once again going hand in hand with not only breakfast products, but also dinner products as well. They have the Sweet Italian, the original, and the Hot Italian version. And then they also have this newer product called Beyond Crumbles. You can put this in things like taco meat, quesadillas, things like that. But going further, let's go ahead and look at this company's annual report. Now, the 2020 annual report will be coming out in a couple months, but one of the things that is most impressive about this company and what gives it an incredible valuation of $9+ billion is the revenue growth. Look over the last 4 years at this company's revenue growth. Now, these numbers are in thousands, so when you see 16,000, actually be thinking 16 million. So in 2016, they did a little over 16 million in revenue. The next year, they did almost exactly a double up to 32 and some change. The next year, they went to 87 million, over a double up. And then you go further, they go from 87 million to almost $300 million worth of revenue. Incredible, incredible growth. And the top line growth is impressive, but what's even more impressive about this company is that you look at 2018, you look at 2017, you look at 2016, these three numbers that I'm highlighting at the bottom right here. They were taking massive losses. And something that you guys know about me is that I don't like unprofitable companies. I don't like to recommend companies that are unprofitable. And then the losses have almost completely disappeared in 2019. And now, even in 2020, some of the recent quarters that they've reported, even in the pandemic, even in the recession, have even been slightly profitable. So this company is no longer an unprofitable company. And as they continue to grow the top line, the bottom line is getting dramatically better. So I think that this company will start having increase profits every year as we go along. Now, one of the main reasons why this company has had the big downturn today, while the earnings report missed, let's go ahead and look at this article right here. Beyond Meat shares tank as coronavirus weakens demand for plant-based meat at restaurants. Beyond Meat swung to a loss in its third quarter and missed analyst estimates for both earnings per share and revenue. CEO Ethan Brown said that consumers aren't stockpiling Beyond's meatless products like they were at the beginning of the pandemic. Sales in its food service segment, which includes restaurants, declined during the quarter. Now, what this is basically saying is that they still have great sales in stores, but they're losing some of their revenue growth in restaurants. And that is completely understandable, thinking about how many restaurants have been shut down, how many restaurants are still partially open, and just basically by the general fact that people are still scared to go out and eat in some locations. So when you factor all that in, I don't really attribute this negative report to Beyond Meat. I think this is just kind of unfortunate for them in their environment. And what I see here, I see temporary pain. You look at some of these other companies. Let's look at some of the other stocks that I own that have recovered quite nicely. You see just basic everyday stocks that have been hit extremely hard from the recession, going down from $150 a share down to 120, 110, whatever. You see other safe stocks like Johnson & Johnson. Even though healthcare was in extreme demand during the pandemic, this stock tumbled from $150 a share down to about 120, 110 or so. Now, when you look at these stocks, you think they're still great companies. I'd still want to buy them, but they're just having some temporary pain. And that's what I see here with Beyond Meat. It hasn't updated yet because it updates every day at the close. But yesterday, this closed at about $150 a share. Today, it's trading in the 120s, so somewhere around this mark right here. I think that this company is having some short-term pain that is out of its control, but that has not prevented anything from management having its incredible revenue growth. And going past that, let's look a step further and look at the balance sheet. One thing that I think that is incredibly important, I don't care if it's a profitable company, an unprofitable company, an old blue chip company, a new high growth stock like Beyond Meat here, Beyond Meat stock has an incredible balance sheet, something that I think is very healthy. You see that their cash and cash equivalents has steadily increased over the last couple of years. Now let's go down further and let's look at the total debt. The total debt over the last 2 years have sat right about 30 million, almost the exact same. But this company went from 40 million worth of cash in 2017. 2018 they went to 54 million, a pretty steady increase, and then the amount of cash that they were able to increase in 2019 was massive. When this stock skyrocketed back during its IPO, they were able to offer shares discounted at around $200 a share, financed at incredible valuations, and that gave them hundreds of millions of dollars to be able to fuel growth even further. So once again, I think this is just another opportunity for Beyond Meat. They have their cash and cash equivalents almost 10 times higher than that of their total debt. So debt is no issue for this company. If they want to raise capital, whether that be the form of issuing new shares, if they want to issue debt, whatever this company wants to do, they can do it. They can do it in about a snap of the finger. Now I want to compare this company to some other food giants out there. This market cap number only updates daily, so this is not factored in the recent drop yet. So it says 9.4 billion. It's actually a little bit over 7 billion. So when we're giving this comparisons, I'm going to say Beyond Meat is $7 billion company because actually once you factor in this drop, it's about $7 billion. So this $7 billion company, let's compare it to some other giant food companies out there. And this is one of its main competitors, one of the only top dogs that could really try to knock it out is Tyson Foods. Now I want to look at this company's market cap. This company's market cap is about $18 billion. And one other one that I want to compare it to, a dividend king, one that has been around a very long time, is Hormel Foods. Hormel Foods has about a $26 billion market cap. So let's just say on average between these two companies that they are roughly a $20 billion market cap. Is that fair? About the average between them? Now let's look at the opportunity for Beyond Meat. When we looked at all their different partnerships with things like Pizza Hut, with things like McDonald's, KFC, Subway, Dunkin' Donuts, Del Taco, Walmart, Target. This company has so many partnerships and is growing at such a rapid pace that let's assume that one day that this company could get to the size of Tyson Foods and get to the size of Hormel Foods. Let's say that one day that this company can do that. I think that that is very possible. There are a few reasons why I think this company can beat these companies out in the long run, like Tyson Foods and Hormel Foods. And one of the main reasons why I think that they can do so is because of this little chart right here. R&D spending as of net revenues. Now look at the percentage of Beyond Meat comparing this to some of the other top dogs out there. We have Nestle, Kellogg, WH Group, Conagra, Hormel, Kraft Heinz, and Tyson. And Tyson and Hormel Foods are on there. Now the second place is Nestle. They're investing 1.8% of their revenue into R&D, which is research and development. Beyond Meat is investing 11% of their net revenues into research and development. Comparing this to innovating into new technologies, you know what it kind of reminds me of? It kind of reminds me of a first mover advantage with a company that has nothing to do with food. It kind of reminds me of a company that is constantly reinvesting into new, higher tech, better technologies. Tesla. Tesla has the first mover advantage. They're investing almost all of their money into research and development for new, better, higher quality products, while other companies, like its competitors, like Ford, is not doing the same thing. And you can see how these are turning out. And its other competitors as well, like General Motors, are not doing anything like that in a sense. And that's why Tesla has first mover advantage, and that's why it's getting to sky high valuations. When I look at Beyond Meat, I see a similar situation, except this is in the food industry. When we look at the amount of spending that they are doing to potentially release new products and even the potential in the future for lab-based meats, I think we're a long way from that, but I think one day this company can pull it off, and it is because of this number right here. I think that they are absolutely going to be capable to come out with lab-based meats to further enhance their products, make them cheaper, make them at a better price point, continue to enhance the packaging and the suppliers that they have, and continue to get these incredible partnerships like listed here in some of these pictures. But this company could eventually grow to these levels, if not higher one day. I fully believe that in my opinion. So let's say, even in a worst case scenario, let's say this company's a $7 billion market cap and it needs to triple its stock price over the next 10 years to get to these levels where it needs to be compared to, say, a Hormel and a Tyson Foods. So if that's the case, that means it needs to triple in the next 10 years. Even at that rate, which I think it could get there probably even quicker than that, the type of investor demand this company has, But let's say it takes 10 years, you're still looking about a compounded annual growth rate of about 12%. If you base that about a triple over the next 10 years, that's still a 12% growth rate for stock price. That's not bad on an annual rate. A lot of my dividend companies that I own in my portfolio will not have 12% annual growth compounded over the next 10 years. Some of them will do better, some of them will do worse, but I think 12% is pretty steady returns for any investor out there. Now, when we look at these things, we can look at the numbers, we can look at the quantitative analysis, and one of the things I want to give is kind of a qualitative analysis and give my opinion on the company. When we scroll back up here and we get to the investor relations, I click our mission. We go to their mission tab. I want to read this. We believe that there is a better way to feed our future and that the positive choices we all make, no matter how small, can have a great impact on our personal health and the health of our planet. By shifting from animal to plant-based meat, we can positively impact four growing global issues: human health, climate change, constraints on natural resources, and animal welfare. These four topics right here is something that my generation and the generations after me have really been focusing on. We really like to focus on things like the better welfare of animals, no more animal abuse, no things like that. We like to focus on things like climate change. That's why part of the reason, like Tesla, for example, has a consumer trend of people wanting to stop climate change. And there's a lot of people out there that will probably buy an electric vehicle just for the simple fact that they think that it is going to help the climate, that they think it's going to help stop global warming. Whether that's true or not, we'll see. But I think that's part of the growing drivers behind this company. I think the same thing for Beyond Meat. A lot of people are going to want to buy this just to impact the environment around them because people like my generations care more and more about that. And that is a long-term trend. People are becoming more and more vegetarian, vegan, and other lifestyle choices like that. And I think this is going to be a long-term opportunity for Beyond Meat. And if you're an investor, I know, me being a dividend investor, not focusing on high growth companies like this, if I were to buy a growth stock, if I were to add a growth stock into my portfolio, Beyond Meat would be the one that I'm adding. And a long-term investor standpoint, I think that this stock is very volatile. This stock could do anything over the next 6 months. It might be $80 a share 6 months from now. It might be $200 a share for 6 months from now. Heck, just a month ago it was $200 a share. But I think if you're looking at the long-term potential for this company, with the opportunities they have, with the incredible partnerships, with their great margins, their loads of cash, their overhyped valuation, all the opportunities that this company has, I think as an investor, this should be a buying opportunity. This 18, 19, 20% downturn should be a moment where you should say, I should take advantage of this now because I don't want to look at this company 5 years from now and it's $500 a share, $1,000 a share, and I missed out on it. So thank you guys so much for watching all the way to the end. If you're interested in buying Beyond Meat stock, you totally have my say so. I think you should go out and buy it. But if you want to follow along with me, I'd invite you to subscribe to the channel. If you want to watch me update these charts every single month, check out the description as well. There's other things as well, like I said, including the referral link to get signed up with M1 Finance, the brokerage that I use. There's other things as well, like mentoring calls, my portfolio, Yada savings accounts, credit card referrals, other things like that. But thank you guys so much for watching, and I'll see you guys next time.